What's going on? Happy Monday. Hope everyone's good. Hope everyone had a decent weekend. And have obviously taken the time to prepare for the week ahead. There is looking like there's quite a lot going on, and quite a lot of potential throughout this week. So we will run through a few bits and pieces this morning. See how obviously they might fare and play out. And just obviously have a very quick rundown of some of the bigger fundamentals that we've got coming up. As far as kind of real opportunities go and fundamentals go this week, it's mostly dominated by the dollar and obviously the CAD. There's a little bit of Aussie data to be mindful of as well, but the majority is dominated by the dollar and the CAD. Obviously, it is the first week of a new month, and therefore, typically, obviously, what happens then is that we are going to see non-farm payroll. We're going to see a few erratic and choppy movements as we kind of establish those position traders and see where they're looking to hold or get out of their positions. Obviously, we have seen some pretty big movements. However, what we are seeing is a little resurgence in the dollar. And if we can get some positive news out of NFP at the end of this week, we could have an absolute monstrous week ahead of us with the USD. Euro, US dollar, obviously we've got this little trend line that's just come through here on 30 minutes to 4 hours, shows it a little bit nicer, to be fair. The remnants of this little trend line coming through here, which we've now broken, retested, and are rejecting away from. Now there was obviously an opportunity to take a position where we've made this higher low, lower high. One day I'll just reel that off the bat without having to correct myself. But you've got that lower high, and obviously we've seen that engulfing candle following that hanging man. Happy days, everything that you would want to see out of a potential position. We're now at a point where we need to wait for the 30 level to be taken out. Once that 30 level though, once 2030, 2030, 2040, somewhere around that area. Once that's been taken out, obviously we do have the potential for a short position. That situation will put us back into this previous range that we've seen. Obviously we've got this bigger range, but we have also seen quite a lot of support established down at 116.20. So obviously that is what we are going to be looking to target as an eventual target with positive NFP news and some fundamentals brushing our way. There's no real reason as to why that couldn't happen. We just need to be a little bit mindful and a little bit patient about that situation. Obviously, if we can get that break back below 120.30 or 120.40, somewhere around that region, we've then taken out the previous low, which means that we have to be mindful that we might see a potential retracement back into this area, back into somewhere around about 2080, 2090, just to see that potential for that retest. Once we have broken through, we can see obviously it's where we've started to find some support, some resistance. So it would make perfect sense that if we were to come down to 2030 and fail to get below, then obviously that push back up into that area is quite likely. And then obviously what we would look to do then is to see that act as a new swing high before looking for that ultimate push back to the downside. But ultimately for the week ahead, barring some fundamentals change in that reasoning, 118.80 should definitely be found if we can get through this support region. Like anything, we are obviously planning, we are banking on the fact of that support being taken out before we can take the short. There is no point getting involved in a potential short play when obviously we still made this higher high and we're still in the realms of a higher low. We need to let that support be taken out. Otherwise, we're just in that basis of potentially gambling on the fact that we're going to see the breakout. There's nothing to actually give ourselves a solid confirmation that that's going to be the case. Yes, we're seeing some very favourable price action at the moment, taking out previous lows and the lower time frames, but those things can just flip and change at the blink of an eye. So to wait for the 4 hours, ideally to kind of close somewhere around about 120.40, that will very much likely be enough of a confirmation for us want to get involved in this short position. As I say, targeting 118.80, and then obviously seeing where we go from there, but potentially below 18.80, obviously we would then have the opportunity to fire back into 116.20 or at least 117 at the very least. So there's a lot of potential surrounding the Euro USD at the moment. Similarly with pound dollar as well, but I don't quite like that as much at the moment. Obviously the pound's been a bit of a weird one. Has shown a lot of signs of both strength and weakness, so it makes little sense to be involved in that until we see some clear and concise movements. Dollar CAD, the long on dollar CAD, we have broken above 126.80, which is where we had highlighted for a potential bounce from. So at the moment we just need to be very mindful. We have two options available to us. 126.80 is obviously a big level for us. We can either see price push back to the downside, or we are going to push back up. Now at the moment it would just make sense to use this area between 127.60 and 126.80 as a potential range situation. So obviously what we do is we just trade in and out of potential positions around that for the time being. There is nothing to really give us a clear or concise kind of entry option at the moment. The fact that obviously we have now started to see this lower low, lower high form on the 30-minute time frames is obviously giving us an indication. But again, you look at the 4 hours, you see that push back to the upside, break above previous highs, starting to see rejection coming away from that previous support region. So there's a lot of mixed signals coming out for dollar CAD at the moment. Obviously, both pairs have quite a lot of high impact fundamentals this week also. So we shall see how we fare. But the fact is, we are currently trading around the previous support region, so we would expect to see some consolidation and just some sideways action for a little bit. But once we get the breakout, obviously we can start to look to range trade, and we're just going to look to range trade between 126.80, 127.60, and obviously below 26.80 down to 25.80. And then we just keep watch on how things progress from there. I do prefer the long. I actually think that we've got quite a lot of potential to end the week at around 28.70, but that is obviously highly dependent on us getting through 127.60. And if we can't get through that region, then we don't really have a potential opportunity at the moment. You can already see through this area here that obviously we've just got a lot of spikes, a lot of sideways movement that is in the market around this level. So it would make more sense to try and get an entry above 127.20 for 27.60, but with anticipation of the break and just targeting 28.70 would make obviously the most sense at the moment. That would give you the higher probability position. Relatively tight stop loss around about 30 pips for 150 pip gain. So that's the position that we would want to take if the opportunity arises. it doesn't seem particularly great at the moment, considering obviously the amount of rejection away from this level we've seen, to be looking to take potential long positions until we are above these highs and until we're above all this noise. Once we get above that, obviously, then we may potentially have that run up to 2760, but it would be the break of 2760 and that previous support that I would be looking for in order to take that eventual target at 128.70. Obviously, the 2450 target that we were spoken about, we came into 2460. Forgive for 10 pips, but from 129, that's obviously a big old win and tick in the win column. So what we're seeing now is just a resurgence. We'll probably head back up and head back towards that level, back towards that area. We can see on the daily time frame that even if you were to go on the basis of this being a lower high, so lower high, lower low, lower high, lower low, a push back into 128 still makes quite a lot of sense for a potential position away. So we will be mindful of that. We just keep watching, keep an eye on how things go. But a push away from 128 back to the downside could obviously spell the fact that we're still in this downward spiral. However, as things stand at the moment, the long makes the most sense back to 128, or at least back into 127.60, 128 before seeing a rollover. But the 4 hours, the 30 minutes, everything is pointing towards those longs. We just can't get involved until 127.20 has been taken out. That's what gives us our edge. That's what gives us the higher probability. Until that point in time, anything else would just be a gamble. We could quite as easily just pop out the lows and fire back to 125.80, and none of us are going to take a 100 pip stop loss on a 150 pip trade. So we're almost certainly going to get taken out of that for a loss. In which case, like I say, we need to stack this probability on our favour, but timing it for the potential risk to reward could be problematic. Dollar yen. Obviously, the yen has just been the whipping boy for the last couple of weeks, and it looks as if that is far, far from being over. I would almost go as far to say as there's nothing more certain at the moment than the fact that the yen is going to continue to take an absolute pounding. So for dollar yen, obviously pushes above 106.80 make the most sense. Above 106.80, obviously we can treat this as a potential breakout position. If we come back to the 4 hours, sorry. Treat it as a potential breakout situation. Obviously, we've seen this area act as support quite often. And obviously it has recently turned into resistance, sort of acted as that range. So as things stand at the moment, obviously a pushes above 106.80 would probably see us find 108. So it certainly presents us with a decent amount of risk to reward. So we will definitely be looking to take a potential long on dollar yen. Higher high, even if we were to see a higher low, you would likely now see that come in at 105.70. So there's still a 100 pip stop loss at the moment if we were to take into account that swing. But the fact of the matter is that we're starting to see, obviously, this series of higher low, potentially higher high, come in. We would end up getting away with a stop loss around about 106.70, 106.60, somewhere around there. And then obviously if we were to break back below that area, then we would just simply take the short back to the downside. Below 106.60, obviously above 106.80, we would take the long back up to the highs at 108. So a potential kind of 5-to-1 position on that already. Even if we were to get involved in a potential short as well from 106.60, for instance, From 106.60 down, you've got 70 odd pips. You would need such a tight stop loss though. You could probably get away with a 20 pip stop loss. That should see you above the highs ever so slightly. So back down to the lows at 105, 79, 105, 80 would still give you the potential for a 4-to-1. So a decent amount of reward, whether we take the long or the short. If we get stopped out on the long, we just flip it, take the short. That should make back any loss and then some. So literally with dollar yen this week, it looks like anything we do take losses on will just become a loan, and we soon collect that back with our interest, whether we can get the break or the bounce below. So dollar CAD, dollar yen and euro USD, we are looking for dollar strength as things stand at the moment. Obviously with euro dollar, we need to get below this 30 region. That's what makes the most sense to give us that potential short. The long, we need to get above 27.20 until that goes. There's not really a lot there. And dollar yen above 106.80 still gives us a decent amount of reward on the table. So there's a few things faring around the dollar. Obviously pound dollar also looks good. While we're still talking about the dollar, let's go and have a look at gold. Saw that big old drop. We've come back, retested, and we've rejected it away from the area of breakout. That should probably lead to the short into 39 and then below 139 back down to the lows. So if you took it an hour ago, then fair play to you. I'm currently running about 30 pips up, I'd have thought. But yeah, there's definitely 300-400 pips coming out of gold this week, most probably to the downside. If you look at the pair, look at that 4 hours, that looks incredible. So I would have thought that there's certainly some potential for full gold trades this morning and into this week that are well worth watching out for. So yeah, there's potential everywhere surrounding the dollar at the moment. So we shall see how things progress with the dollar, with gold at the moment. I would like to just hold off ever so slightly. I would want that 4 hour close to give me that confirmation. Until that happens, I get a little bit nervous surrounding the pair. Obviously, I think below 48 would probably, or 47 is likely to give you lead into that short anyway. But I want that close to give me a solid foundation to place my stop loss. Again, about a 50 pip stop loss, 100 pip stop loss on that, to be fair, so that's a bit much. But what have we got going on? 120 pips. We shall see what happens. It might be that it might be worth waiting for a slightly better swing or slightly better stop loss. But we'll keep an eye. This little region that is boxed through here at the moment is something obviously to be very, very mindful of. So we'll keep an eye on it, see what happens. Swiss franc. Obviously, the Swiss franc took a bit of a beating over the last couple of weeks. That's purely mostly down to fundamentals and the fact that I would very much imagine the Swiss National Bank have allowed the currency to weaken off ever so slightly amid speculations of them getting involved in tampering with FX markets. We've seen obviously quite a large push down, and this isn't solely in part to the Swiss franc. Obviously, the Aussie dollar had its own research run over the last couple of weeks, and we're starting to see the remnants and fallout of that. Now, the push away from 70.50 would obviously be a a good entry opportunity for a push down to 106 to 69. Where obviously we would look to see that potential push back to the upside. That would be the ideal place to find some support, probably even 69.50. So there's a potential for 100 pips, which for the pair is actually pretty big because you're not going to need a very big stop loss. If we were, for instance, to get involved in a potential short from the break back below here, let's say we wait for the lows to be taken out, we're going to get away with a 30 pip stop loss, probably even 25 pips, and for a push down, obviously, we've got a 4-to-1 potential. However, obviously also, with the Aussie dollar being quite so strong, and obviously we've got the Aussie rate decision this week, we could very much see this being our higher low, our higher low, and then obviously seeing that push back to the upside, back to 72.80. So there are potentials surrounding the Swiss franc all over the place. Aussie, Swiss, long and short are both options. CAD Swiss, also presenting both those options. Obviously, last week gave us quite a weak close with CAD Swiss. Obviously, we saw dollar CAD bounce back against, so the US dollar bounce back against the CAD. We've seen the Swiss bounce back against almost most currency pairs. So we shall see how we fare this morning and throughout the beginning of this week. The potential still stands around 72. 72 could give us either that long back up to 72.60 and those previous highs, or it acts as an area for us to bounce from and head back down to 70.50. Either way, options are there, very clear cut, very clean and precise entries and exits. The markets don't really mess around when it comes to the Swiss franc, so we should be pretty clear on where price is going to head as and when the opportunity presents. But it all hinges around 72 until we see that level tested, or we see that area broken above, or obviously the bounce and rejection back to the downside. There isn't particularly a position to take at the moment. We just need to wait it out, be a little bit patient. Same, I imagine, is going to apply to pound Swiss. Obviously, the pound, we've seen the gap last night, seen it push back up. Can very much expect to see pound Swiss come back to 128. We might have a potential to take an entry above 127.20, around this area. En route to 127 or 127.80, 128. So you could take the 2080 trade there for the 60 pips. That might be well worth looking into and doing. 127.20. Just gonna set. He says, I'm just gonna set an alert at 127.20 to allow me to look at the chart as and when it gets to that area. But I quite like the potential for that break back to the upside on the pair and see that push back into 128, and then obviously we'll see how things fare from there. But either the potential obviously to go back to the upside or to come to the downside, either or, it makes no difference. It gives us potential options and opportunities. So yeah, there's quite a lot of options available to us coming into this week. Obviously, the dollar looks as if it's going to continue its strength, but we will need to be very mindful of that. But coming into a big week for the dollar, positive non-farm payroll at the end of the week could spell out the rest of this month. As far as the dollar looks, I think obviously if we do get some positive NFP data, and things start to make some positive noises surrounding like the stimulus package and everything, see little reason as to why 116 won't be possible this month for Euro USD, maybe even as low as 115. And likewise with gold, down to 117, or even potentially even lower than that, maybe somewhere around the 115.60 mark, could be a potential for gold by surrounding this month at some point, if obviously we can get some positive noise coming out of the US regarding data figures, and obviously stimulus package would obviously kick on the dollar quite substantially. So we shall have to wait and see what happens. For those that do want to get involved in gold, I think it does present even a pretty good opportunity from here. You need 120 pips stop loss, but you can certainly target back at the lows for 300 pips. So a little under a 3-to-1, or obviously target back down at 117. The whole number, giving yourself obviously a significant amount more. Let's just say down at the whole number. So we certainly got the potential to see this turn into a potential swing trade. How far did I go there? Down to 17. Obviously, that's not what I meant. But certainly back into this previous area, these previous lows, would give ourselves an opportunity for a potential position. So it's something that obviously we can be mindful of coming into this week. It's early days, it's early doors. No need to get too excited by things at the moment as things stand, but obviously there is some potential surrounding pairs as things go. Be safe, be sensible, whatever it is you're up to. And like I say, I will catch up with you all later. Just be mindful that there is some pound data out just after London Open. There's PMI, so that could see the pound kick on a little bit. And then obviously there's PMI data for the CAD and dollar this afternoon also. And then Bank of Australia rate decisions overnight Tuesday. So obviously overnight tonight, early hours of Tuesday morning. That is need to be very, very mindful of any positions that we are in. But we will go through the potential moves that occur and obviously see where we may be able to capitalize on any momentum that might come into the Aussie dollar tomorrow morning. Apart from that, have a good day. Whatever it is you're up to, be sensible.